Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Within the last 12 to 24 hours, the Australian dollar has continued to weigh on the support. First of all, we got the rejection from this trend line, as you can see here, which emanates from around 64 cents, which was the support and now seen as the resistance due to the break and the challenges to the top side failing. If we look a little bit closer to this pattern, you can see here that the bodies were closed underneath this trend, and therefore from the gravestone doji has posted a negative sentiment on the Australian dollar, and now taking out the 73 cents has exposed the region to the lower side of 72 cents. Reassess from there, because we could even be looking lower down towards 71.30.50 area, which is outlined by the blue line. Nevertheless, from the recent 7-odd day trek, the ADX was bullish, but not anymore. And with the MACD nearly in sync with the RSI to the bear case, and along with the close under that we saw this morning, that is from 73 cents, that is New York close, has supported the downside case. To some surprise, since the breakdown from the shooting star, first of all, which was rejected at 120, we got the confirmation after taking out this candle, where I can just outline it here, which was around 118.50-60 area. And now from a hanging man is that first we have initial support line that's holding at 117.60-70. Now I do believe from the technical pattern that this hanging man should present a further bearish case, and also to the fact is that you can see the market is in sync with the RSI and the MACD. Tonight at 10:30 is the non-farm payrolls number. Do keep an eye on that, after the unemployment claims overnight was lower than anticipated and came in around 880,000. If we see a lower unemployment rate, that is, which is forecasted of just under 10%, then we could see further strength in the US dollar, even though the pattern to the US dollar holds to a bullish case from a posted hammer, and also from the initial building of the pattern does increase the downside potential. But euro can't get further than in terms of a negative case until we break this level where the trend is, and as I mentioned, it's around 117.50. Dollar yen took a challenge to the upside and thought better of it after you can see the rejection from the 106.5 level. The market is now back to a slightly negative case. I do anticipate that further weakness is in play, but we do need to see a break beneath the level of 105.55, and if so, then we would see further weakness to 104 as a potential target. The assessment from this is from this big or large candle from the bearish outside range day. Are we there yet? Not quite. The pound hasn't broken the level of 132.70. It has weakened, but still needs confirmation. But given from the RSI and the MACD, we are set up for a further down play. This is all supported from this gravestone candlestick, and therefore the bearishness, along with the hanging man, does support further weakness. Now, a close of New York, that is at 7 a.m. tomorrow, under 132.70 would open the way down towards 130 as an objective, and this would lead on to sterling yen to play further to a weaker outlook. Now we've got a gravestone, we've got a hanging man, and we're just breaking this trend line, which is somewhere around 141. The MACD is nearly in sync with the RSI. So if we do see the break under 132.70, which is very, very close, 73 trading at the moment, then we could see this slide in sterling yen and look towards a 138 handle. The bearishness is still, I believe, in focus for the gold. It did take the challenge of 1,926 after printing a low of 21. Nevertheless, the bears are still there due to the fact you can see from this MACD and also from the RSI. A close under 26 could lead towards 1,900 or down to 1,880 and reassess from there. I'm only going on the pattern that came through just recently of this gravestone doji, which has enforced the slightly bearish candles. So you can see these two, and a break under 1,926 leads the way. A bit of a stab to the downside when it comes to oil, but recovered quite significantly. You can see here we got to a low around 40.40 and then rebounded back to now above the 41 handle. And maybe just a little bit more weakness to play here. But as you can see from the ADX, it is trending to a bear case. The MACD is bearish. And the RSI is bearish, but a little bit oversold. Then hence the rejection. I still believe that anywhere towards $39 a barrel would find demand and maybe see a recovery eventually back towards that top side, which is somewhere around $43.50, 80. Well, that wraps it for today. Thank you very much for joining me. And as I mentioned, keep an eye out tonight at 10:30 for the non-farm payrolls numbers. And if we do see a slightly better number to improve, the economy would see a better rise, or should see a rise in the US dollar and inflict some of the weakness against the Aussie, the Euro, and the Sterling and gold. So thank you very much again, and I hope you enjoy the weekend also.